Okay, good afternoon, everybody. This is the weekly take on the market. Today's Friday, December 17th. It's just after 1 o'clock Pacific time. The market just closed. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Here is the disclaimer. I am not licensed, cannot tell you what to buy, sell, hold, whether to short, whether to hedge. You're gonna have to make all those decisions, right or wrong, on your own. Take a moment to read the disclaimer, please. So as usual, we'll talk about the markets. Then we will talk about the industry groups, a couple stocks to watch, things that are on my radar, and then the usual quote of the week. All right, so let's get into MarketSmith. So here is a chart of the Nasdaq composite. Now we're only been closed 10 minutes or so, so the volume is not, excuse me, it's not real time. The price might be a tiny bit of a lag. Its price is going to be about 20-25 minutes delayed, but you know, we're not trying to day trade here. We're trying to get an overall feel for the markets. So that's fine. Today the market try to hold, especially the Nasdaq. The S&P, I think, was down. Let's go ahead and check. Yeah, the S&P was a little bit of a laggard for today. The Russell was up, and ARK had a very, very strong day. The ARK ETF. I noticed a lot of the stocks that have been beaten down, like CRISPR and Teladoc and things like that were up today. So today was NVIDIA, Apple. They just, you know, they didn't really do a whole lot today, but some of those other stocks were up. So this is a pretty powerful day. You can see, let's look on the weekly chart. You almost have 3 weeks tight. It looks like it's tired of going down, but I hope none of us are in this one. It's been a real laggard for a long, long time. You know, you can see the relative strength is peaked forever. I think the time to short it was, you know, sometime here. Now I'm picking the perfect short times. I can tell you that, you know, I might short it there and get stopped. I might try again, make a little bit on the downside. I might try again, but, you know, maybe I'll catch this. So if you were shorting it, you know, you might have had 3 or 4 signals and only made real money one time. When it's undercutting the lows, like you can see when it undercut those lows and became obvious that it's going down, what happened? It just roared up 30%. So you're undercutting all the lows at 97. It's obvious that ARK is a short, and I think it's probably going lower, but it's too obvious. So I've been in, I've talked about IBD Live. I can't short this because my broker won't let me borrow it, which is another signal that there's a lot of people short it. But there is an ETF that goes opposite this SARK. It's called SARK. So you can see, rather than short it, I could buy this here or here. Now, I'm not in it right now because I think it's too obvious of a short. And you see, you've got, like, this is relatively short term, but a bit of a pretty nasty couple of reversal top days. So that tells me that I think ARK is tired of going down. It's been going down for a long time, and some of the stocks have been going down for a long, long time. Let's go back to the indexes, the S&P. Now, we had a follow-through day yesterday, and IBD is back in, you know, confirmed uptrend. You can see the volume was higher than the previous day, and the index was up 1.6%. Now, I've been doing this a long time, studied lots and lots of follow-through days. I don't think I've ever seen a follow-through day at or near new highs. I think at this point, normally you'd already just be in an uptrend. But there's a lot of damage under the surface. So IBD was correct, I think, to go into market and correction, or, you know, previously, I think we've been in a bear market for a few months. And I'll talk about that with some examples. But the indexes are very, very difficult right here. So they have 2 choices. They can say, oh, you know, we don't know that we think the market's not going to go up, ignore the signal. And if it goes up without them, that's like a cardinal sin. And so they're always going to err on the side of going with the market, giving the market the benefit of the doubt. Because they can always switch and just say, look, uptrend under pressure. I don't know what they'll do today. Maybe they'll go to uptrend under pressure. I don't know. But if it starts to go down again, they'll get out. Now you have the signal for the market, but you also have to understand that when you get that signal, what do? Well, we don't buy the market, we buy leading stocks. So there should be things to buy, and there isn't. There's very little to buy. I listened to the podcast with Jim Ropel yesterday, and he talked about DHI, which seems fine. The buy point is, 3% ago. Nothing wrong with that one. He talked about FTNT holding up just fine. Nothing wrong with that. And then he talked about NVIDIA. Looks a little tired to me, but he was buying on this day, bouncing off the 50-day. So, you could manufacture a couple of things, but there really isn't anything like this. So this is my favorite follow-through day story. And stop me if I've told this one before. Of course you can't, because this is being recorded. So this is Chipotle in 2010. And on this day, on September 1st, I was very, very new to MarketSmith. Gosh, maybe a few weeks or a month working there. And this was a follow-through day. And a lot of times people say, well, how do you know it's a follow-through day? Well, you don't know for sure during the middle of the day, but you usually get a pretty good feel that it could be a follow-through day, right? So this is not drawn to scale, but you can see the S&P had been going down for a number of months right here. And on this day right there on September 1st, Chipotle breaks out of just a really strong, technically sound cup with handle. So you have an idea. What were Chipotle's earnings and sales like at that time? Really good. Arusha and I used to go to Chipotle almost every day, and we would get there at 10:30, even though they only opened at 11, because we only had a half hour for lunch. We had to drive there. It was 10 minutes away, and we couldn't wait in the line. And if we caught the line, we had to go someplace else. So it had all the Cansum trappings. And in the middle of the day, Scott O'Neill, who was a portfolio manager, and at that time, he was the president of MarketSmith. He comes out of his office into like the little bullpen that we had area, and he says, we're buying Chipotle. We meaning the portfolio managers. Now, Scott sat in his own office. Bill had his own office. Charles, Mike, they all have their own office. They don't collaborate. I imagine Scott could see the sheet that they were buying Chipotle, or maybe when he called to buy, maybe he got information that, hey, you're behind so-and-so portfolio manager. He has an order in front of you, which could happen to those guys. So it was really cool. It was amazing information that they were all buying this stock in sync with the market following through. And you just had this setup. And so usually if there's a really good market setup, you've gone down for a while and you have something to buy. We don't have really, honestly, either in this scenario. There's very little to buy, and we haven't gone down that much. So take it for what it's worth, but that doesn't mean that the market can't keep going up. So you're looking for potential ideas, but if you're not being that active, I don't think you're alone. Very few people I know that are doing this for a living. None of my friends are really that excited about the market. I think it's a low conviction environment would be the best way that I would put it. I have very low conviction either way. Even sometimes if I'm short something, I don't stay short very long because I don't have any conviction that it can keep going down for 2 or 3 days. So it's a low conviction environment, and I would just treat it as such. Let's go back to the Nasdaq. Let me reset to today. And and there is your follow through day right there. Now we have undercut the low of the follow through day today. That is not in the rally. the rally would officially be over if we undercut the low of the start of the rally. Now, IBD has studied when you undercut the low of a follow through day, what are the odds, the probabilities that it eventually undercuts the low of the whole rally? And they're high. So it's not a good sign that we've undercut this low, but it doesn't negate that follow through day. So if we go to 2020, the follow through day, bear with me, I think it was in April. There we go. I think this is it, right? So you can see how if that's the follow through day, and I might be wrong, you don't have to at me if I am wrong, but you get the idea. I think that's it. If you undercut that low, it's usually a sign of lack of strength, right? You want a powerful thrust, but it wouldn't end the whole move. It would have to come all the way down here, which is a long way, which is usually what you get on a follow through day. So, but this follow through day was very powerful, which is what you want. You just want to see boom, 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 right? Just straight up power, things to buy, DocuSign breaking out, Zoom Media Teledoc, although they broke out before this. But I think I marked up a chart of some leaders and where they broke out, and a lot of them were breaking out, in this area, which is what should happen. All right, so let's get into the industry groups. I'm gonna fast forward this. It's the same thing that I said last week. There just isn't a lot there. Semis, NVIDIA, check. Retail department stores, too small a group. It's heavily weighted by, DDS possibly, and DDS is topped. Transportation truck, it's fine, but I just don't know how XYZ trucking is better than ABC trucking. It's kind of just a big group move. It's like owning a gold stock or a oil and gas drilling stock. I guess there can be companies doing it better than others, but it just makes it very difficult to differentiate. Not one of my favorite groups. Telecom, fiber optics, newer 9 stocks. Media periodicals, too little, too few stocks. Funeral services, too few stocks, 5. Retail super mini markets, defensive, too few stocks. You can see retail, wholesale auto parts, too few stocks. So it's the groups, there's just not a whole lot that's exciting in the groups. All right, so industry groups, stocks to watch. Oh, last but not least, there's a couple of mutual funds I want to talk about. So, and it comes back to, excuse me, the overall market. So let's start with PRNHX, which is T. Rowe Price, New Horizons, one of my favorite funds. You can see his performance is very good. His holdings, Vive, Team, CSGP, Coupa, these are all really big winners. Paylocity, I don't know much about that one, but this has been a very good fund. He owns 158 stocks currently, and usually just beats the pants off the S&P. If I go to the weekly chart, this stock, and it's only in hindsight that we know, topped, or this fund, I should say, topped in September. It's all the way back to 75, which is, basically the prices it was early this year. And most important, or most thing I want to highlight is it's underneath the 40-week moving average. And it doesn't spend a whole lot of time under that. So you've got that, kind of mini bear market in 2016. I think the S&P went down 19.9% or something. So in that area, you've got the Christmas Eve massacre, right? Remember when the market was just falling, they were worried about the Fed, and then the Fed changed gears in early January, just a couple of weeks below that. And then you have the initial COVID crisis. So this is a fund that, really rarely spends any time below that 40-week moving average. Look at the monthly chart. I think this is a 10-week or 10-month moving average. it just kind of hugs that, just nothing but up since the big bull market started 4 to 80. So that looks, and they're going to own a lot of stocks. And so that's why they're struggling, right? Because they're going to own a lot of stocks that are down 20, 30, 40%. LAGWX, which is another very good fund that I follow for sponsorship. That's Lord Abbott. They own 103 stocks. And Crocs, InMode, Shockwave, love that company. I didn't handle that one very good, but you can see kind of high growth stocks. And now it's same story, right? It's finally broken below this line, and it's been there below there a couple of weeks, even more underperformance. If you go to Fidelity Contra, he's above that line, right? Why? Well, what are his biggest positions? Facebook, Amazon, Microsoft. Where's NVIDIA? Tesla's the only one that he doesn't have a big position in. He might own a small position. At one time, I think he had a big position in Tesla. Netflix, Salesforce. So he basically owns the index as far as his percentage of assets, right? He owns 315 stocks, but half of them, 48%, are in the top 10 stocks. So it's like the QQQs, really, is now, and that area of the market hasn't rolled over yet. So that would be food for thought. You can see the divergence in the market, and if you go to the overall mutual fund index, there's the S&P going up, and there's the relative strength of the mutual fund index going down. So I would say, as crazy as it sounds, I think the market, the average stock, topped in February or March, right there. And I think Justin Nielsen mentioned on the podcast, I encourage you to listen to it, that he's just trying to get his account back to the February, March highs. It's funny. I believe that's exactly what he said. So I think the market topped right there. The average stock, let me take that back, not the market, because the market has done really well, but the average stock, the growth stock, if you're buying individual stocks like I am, like a lot of us are, it's been really hard in the last few months. And I've highlighted the Nasdaq relative strength issue, where the relative strength peaked at 14,175, made a new high price wise, and the RS didn't. Made a new high price wise, RS barely up, even though that's a big move, and new high price wise, and RS line's not confirming. It's just not confirming all those moves. So I think it's been a really tough environment for individual stocks, and a lot of you probably know that. I don't think that's news. As far as stocks to watch, I guess the main ones that I would watch is for market sentiment. Tesla, I think it's just such a barometer of this bull market we've been in. It's one of the most liquid bull bear speculative names. Even though it's in the S&P, it might not be as speculative as it once was, but that looks like you've given back almost all of the gain from the breakout. NVIDIA, very important stock. This looks like it's under distribution to me. You can see how, even though it's not really going down a whole lot, it's down 20% off the highs. Every time it goes up, it gets pushed back. Do you see all those closes besides that third one? They're all lower, right? So the stock's trying to go up, gets pushed back, tries to go up, gets pushed back. If you own a bunch of NVIDIA, you have to sell it when you can, not when you want to. So the way to sell it is into strength. So you get a day like Wednesday, and the stock's just roaring, it's up 20, and then the very next day it gives it all back, right? Because somebody or a few of funds are trying to reduce their exposure here, and so it's not a new name. It's like, if you, I'm not saying NVIDIA can't go higher. Of course, anything can happen. I watched Cisco double and probably would have said the same thing. Can't go any higher here, So, but it's not a new name. It's not it's every institution knows this company inside and out. So it's unlikely you've got anybody, trying to build a new position here, which is what gets these stocks to go is the change. Something's changed with NVIDIA. The earnings and sales are coming in, and you're XYZ mutual fund and you don't own NVIDIA. Man, I got to build a $500 million position, and that's what gets these stocks going. And I just don't know. Maybe I just don't see it, but it looks a little tired. Now it is NVIDIA, so it'll be basketed to the index a lot. So it's going to move around a lot with the index, of course, Tesla as well. The only name that is of interest to me that I own is CF. I do own this. The group, everything meets all the criteria, big earnings and sales. The group is improving. It's 18, I think, last I looked. Yeah, 18 and 197. I don't think it has quite the sponsorship that I would prefer. Yeah, it's at 0, which is both good and bad. Why aren't the funds in there? I don't know. Maybe they're on their way. Maybe they're doing that. If I click show fund ownership, I can see there's a couple of Fidelity funds that I follow that have a position. But yeah, I'd like to see a little bit more sponsorship. But relative strength, 96, and the RS line is within inches of a new high, and you're just you're bouncing off the 10-week here. So if you have to own something or want to own something, I usually like to own something. I think it gives me a good feel for the market. So I'm almost always in something. It might be small. If I have a 10% position in CF and it goes down 10%, well, I'm 90% cash, I lose 1% of my whole account. It's not going to kill me if I'm up X amount for the year. So if I'm down X amount, we're going to use one of the quotes, the founder of Whirlpool. If you think that because you have Tesla, an internet security stock, a semi stock, that they are not. They're in different industries, but they are all growth stocks. And when these birds of a feather, when one dives down, they all go together. So if you're loaded up in 10, 12 stocks, but they're all high beta, high growth stocks, we've all been there. You have days, it's like, wow, you can't believe how amazing the day was, because everything you own goes up way more than the market, and it works in reverse. So you're not really that diversified, is what he was talking about in the podcast. You can find that in investors.com, or, I have an iPhone. Apple has a podcast, and it's the IBD podcast with Justin and Arusha. All right. Reach us at MarketSmith.com, 800-831-2525. Next Friday is Christmas Eve. I don't know. I don't know if I'm going to do one or not. If the market is just done nothing, then I'll probably just leave it alone. If the market does something super dynamic and I think there's enough to talk about, then I'll be here. So who knows? So if I don't do one next week, have a great holiday, everyone. And we'll see you next year in that case. Bye-bye.